So there's three major types of insurance. Term policies is probably the most widely discussed for a number of different reasons, arguably because of the controversy around it ending, and ultimately you no longer having insurance and you paid all that money over time, which is no different than anything else that you pay for. You pay for it while you use it. But the other reason is because it's the most cost-effective means for insurance. And that's because they have actuaries that actually do the mortality calculation that based on your age and health, the likelihood that you utilize this policy is pretty slim. So that's why it's priced the way that it is. Now, they have gotten significantly better and started to offer living benefits, which gives you access to the policy in the event that certain things occur throughout life when that policy is in force. However, that being said, term policies aren't the end all be all, and they definitely aren't the black hole that people paint them to be. They serve a purpose, and insurance essentially is, in its essence, to offset your working capital. So while you're working and people are depending on your income, a term policy is geared towards replacing that income in the event that something happens. So it's almost necessary to have it in place and it to be cost effective. But the idea is that as you build your, what I call capital, your real capital, or build up your assets, that the need for that term policy is diminished and thus able to be terminated or surrendered. And it's geared toward falling off. So be more intentional about the way that you structure these policies, a 10-year, a 15-year, a 20-year, based on your income goals, where your family is, how much of your income they depend on, and so on and so forth, so that as you reach those milestones in life, you can have it address the appropriate concerns as far as your family is concerned, for lack of a better way to put it. Not to be redundant, but that term policy, I think, has a place in everybody's financial picture for the most part. And it's just a matter of sitting down and charting out where your family is, what's going to happen over the next 10, 15, 20 years, because you do truly need to have your income be replaced by that term policy. And then in the event that you're not here, your children still go on. They still need to go to college. They're still going to have homecoming. They're still going to have prom. They're still going to have those life events. The only difference is that your income won't be here for those events. So that financial burden is going to fall on whomever you leave behind with your children, to take care of your children, to take care of that mortgage and all those expenses that you prided yourself on providing for on a weekly, monthly basis. So a term policy definitely has its place in that regard. And it really, like I said, just comes down to mapping those things out and figuring out throughout those various points of life how much risk exists for your family in the event that something does happen to you, and have an appropriate mix of coverage, be it assets that you have in place and insurance to offset that loss should that occur, so that everyone is protected. Because I mean, we all know that you love your family, and what better way to say I love you than to make sure that they're prepared for the unthinkable, which is you not being here.